Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Brucey, how we doing?
I'm doing great, man. Doing great. Happy Monday. Great weekend, great football game. But we got a lot to talk about. That if you are looking at buying, refinancing, or if you are a real estate agent, I just want to talk to you a little bit about what interest rates are doing, what the Fed is likely to do here in the future, and when that is likely to happen. So
Awesome.
First of all, I hope you enjoyed your weekend. Were you able to stay up for the Super Bowl?
I stayed up, watched the whole thing, had a bunch of people over, a lot of food. Oh my gosh, way too much food. I probably have leftovers for a week.
I bet you do. Well, I tell you what, I had stayed up. I was watching the overtime, and the 49ers scored, and they were up. And I don't know, I put the CPAP on, and the next thing you know, I'm out. And I wake up, and I'm like, oh, what happened? I missed it. I can't believe I missed it. My wife's like, well, the Chiefs won. And I'm like, I can't believe I fell asleep during that. So anyway, Taylor Swift's boyfriend again.
Yes, she did.
The Dynasty.
That's right. That's right.
The Dynasty.
So hey, so what do we have? What do we have in store today? I know we were.
So here's the thing. I think we all need to be very, very aware of what the market and what Jerome has said he's going to do, what he actually. So we see that he's quick to react, saying that this is happening, but then he turns around and reverses it, 4 to 5, 7 days later. So we have to look at what exactly would we expect is going to happen. So we do expect that interest rates are getting cut by the Fed rate because they're going to get pressure from the European central banks. So I think that's going to happen. I just don't think it's going to happen anytime soon. And right now we're seeing the market is at a pivoting point that we've hit the floor. At least we hope it's the floor. If we pierce this floor, then we could have some trouble with interest rates. But right now we are bouncing off of a floor, and I'm hoping that we see a little bit of trajectory on the 30-year bond market, and things start to improve a little bit. So if you don't mind, I've got a chart here. I wanted to show you some interesting patterns. So if we can bring that up. So if you're a real estate agent and you want to have a better understanding of what we look at, most mortgage lenders don't even know how to read a chart, let alone consult with your clients so that you are a better educated real estate agent. But so this is the pattern that I'm looking at right now. So you see back over here, this was back on December 27th, which was high. I want this chart to be up because when bonds are up, rates are down. Okay. When the market is down, rates are up. So we want these bond yields to go up. So if you see these patterns, these are about 7 to 12 days each cycle here. I've charted them out. So right now, we hit last week was not a great week. Matter of fact, the best day we had was back on February 1st. We're at February 12th now. So 12 days ago was our best rate that we'd had in a while. And we just got worse and worse and worse. Well, we had this negative pattern here, and it went down low, but fortunately it didn't pierce this floor. So I'm looking at floors because they will tend to create patterns. And we're also looking at ceilings. They're tending to create patterns. So I am thinking within the next 7 to 12 days that we could get back up into this territory. And that's going to probably put interest rates somewhere in the low sixes, mid to low sixes. Right now, they're mid to high sixes. So we could use this gain. So if you're out there looking to lock in, I'm watching this carefully. And this is today. If you look at today, right now, got up as much as 13 basis points and it's down, and you're only about up 3 basis points. That's pretty well flat as a pancake. But what we don't want this to do is start coming down this direction. We want it to start going up. Now, if we look at a longer chart,
let's zoom out. There we go. Because that dip way down there, that's when rates were high, right?
So these were when rates were in the eights. Okay, you were hitting 8.25% interest rates right here. But if you look across here, the last time we were into this territory was way back here on May 11th of 2023. So hopefully we can get back up. Again, look at where we can go from here. This is back May. We had some ups and downs, but then if we could get back into a pattern where we're piercing this, we are doing really well, because now we can start getting into some positive territory. I don't think that we have much of a chance on getting any higher than about this right now until there's a Fed cut. I think this is about the best we can look for, but then that's still attractive. What we don't want is to get back down into this territory here.
Gotcha. Well, that's great, man. Whoa, look at that. Look, that must have been when rates were super cheap back there, huh?
Well, we go back up here. Yeah, you see, well, we're back into September of 2021. This is when your rates were 3.5%. Right? Look at that.
Right.
Look at that spike we had. This was just all really good territory right here. But that's not going to be seen again. You're not going to see that.
I don't think we'll ever see that again. No.
Times again. What we can expect is maybe even in this territory right here, or a yield of 1.6 to 1.8. That would be really positive. Then we could be in possibly the high fives at that point. And I think that's going to be really, really healthy for us. But right now,
that feels healthy, right? I mean, yeah,
absolutely. So that's what you get when you work with me. You will get an education. Now, is that ever a guarantee that I know what's going to happen? Of course it's not. I don't know whether it's going to go up or down any more than anybody else does. However, I can watch patterns and I can consult my realtors and my clients as to what we think we can do. And then, of course, it's up to them as to whether they want to take the risk of it or not. But at least I will give you the information that's available.
That's awesome. Thanks very much. Every time we talk, I learn something new. So that's right. That's really
and you'll see that I keep track of what events are happening in the news. So today, there's watch on the S&P. Trades are flat, and there's no significant news coming up. All right, we're watching the consumer price index right here. Mortgage bonds are a little bit higher right now. We want to see it reach up into these higher territories. But right now, that's kind of the news for today.
Sounds good, man. Sounds good. Well, I continue to see a lot of people coming into the buyer side of the market. And one of the things that I see happening is a lot of people are looking at condos. I have a lot of buyers these days wanting to look at condos because it's affordable, right? Or it appears to be affordable. Have you seen anything about Fannie and Freddie becoming more friendly to condo financing? I think they're unfriendly to it, but
here's my point. I won't tell you whether I think they're friendly or unfriendly, because when we had that collapse of the condo back in 2021 in Miami, and we lost 98 souls were lost in that condominium. Fannie Mae got together with the federal government and decided that they were going to implement an addendum to the condo questionnaire. And that addendum, I think it's 1076, if I'm not mistaken. I don't quote me on that, but I think it's addendum 1076. that the condominium has to state that they have no knowledge of any structural defects, or they have to have a structural engineer every single condominium in the entire complex. Now, that would be extremely costly, but I have a feeling that things like that are going to be required for them to get insurance. Just like you got to have a roof on your house that's less than 15 years old. They're going to make these condominiums do these structural integrity inspections, which I know that engineers are not cheap to deal with. And if you have to evaluate, if you had 400 units in your complex, can you imagine what the cost of that would be? But now all the condominium association has to do, or their management company has to state that there's no knowledge of any structural defects. If they state that, then we can move on. But
so Bruce, did you know that there's now this is only Florida, right? But did you know that there's a Florida law now that all condominium buildings with over 3 floors have to get inspected, have an engineering inspection? I don't know that they go through every unit, but they're looking at the building structure itself. They have to do it when the building becomes 30 years old, and it has to renew every 10 years. They have to get this same engineering study done to make sure the building is sound, and they have to, anything that comes up in there has to be fixed.
Yeah.
Were you aware of that?
Yes, I am well aware of that. Unfortunately, in our area here, we don't have a lot of high rises. In my Tampa market, we have a lot more of them. Right. And these are things that are going to have to be done. Now, if they don't do it and the owners don't approve to do it, you are going to totally trash your value. So you're
I don't know what I mean. Yeah, I don't think they can choose to not do it. I mean, I didn't read through the whole law, but I read some of it.
Well, there still has to be enough money in the budget to do it. So you have to collect the money from somewhere, and the money's got to come from the homeowners. And I'm going to tell you, if they don't do it, then we could end up with insurance issues as well. So hence my reason that I heed warning when people are buying a condominium, because with insurance costs going up, your insurance goes up. What do you think about the master insurance policy for the complex? That's going through the roof. Now we have these structural integrity issues that could cause assessments to the homeowners, and those assessments could be very costly. God knows what it would take to do a 30-story condominium complex, and how much the engineering report would be on that.
I'll tell you what, I have one. I don't have it in front of me right now, but I'm selling a condo over on in Daytona Beach Shores, and I had to get the engineering report from the condominium complex, and I want to say it was about $2 million for the study and then the repairs that they had to do.
Right.
Fortunately, there's like 400 units, so it's not as costly per unit as it would be if it.
And I don't even know how they perform it, because they have to determine that the rebar in the concrete is still, structurally has its structural integrity. And I don't know, what do you have to do? Open up different parts of the wall and then patch it back up? I mean,
maybe that might very well be what they have to do. They might have ways to look inside the concrete with
X-ray machines,
kind of like an MRI, right?
Yeah. Well, listen. So condominiums really meet the lifestyle of many, many people. Okay, that just don't want the headaches of doing yard work. They want to make sure that the grounds are maintained. They want to come in, turnkey, go home, go to work, do whatever they want. So the lifestyle's there. Just be aware that if your condominium does not have that, does not have an engineering report, it could be a future assessment for you. And be aware that insurance policies change, and these insurance companies are going to continue to go up when it comes to insurance on master policies. So just be aware that you can't always control it. Where if you're in a single family residence, can your insurance go up there? Well, of course it can. But if you're homesteaded, your taxes can't go up, and your insurance can go up, but it's going to go up everywhere. Right? Yeah. You have a little bit more control over a single family residence.
Bruce, we're bumping up against 15 minutes, man. We've got to both.
We got to go. Hey, great talking to you. If you have questions, we're in all 50 states. My contact information is attached. Feel free to reach out to me anytime. Adios.